What we first start with is that we have to extend the Tax Cuts and Jobs Act of 2017, and that was a priority of President Trump's, and Secretary Bessent spearheaded that operation. And then I think from there, it's like, okay, what can we do to build upon the success of the first administration, where President Trump had very strong non-inflationary growth. Growth was nearly 3% for the first 3 years, almost 3.5% in the third year, right before the pandemic. And then you sort of figure, okay, how do you build the best economy possible with pro-growth incentive tax structures, cheap and abundant energy, and friendly business regulation, and you just see what happens. So,
does the White House make the outreach there? Or are you calling companies around the country saying, let's
that's not
talk?
my understanding. No, I think it's one of those things where, let me say this, from my own vantage point, I know that when I'm lucky enough to be in this position, people say, can I help? What can I do to help? And it could be both sides of the aisle. People really, they appreciate public service and want to help out. That's probably what happens at the corporate level, is that, okay, how can we make things better? And, of course, the incentive structure is in place for companies to want to invest here. This is like with all these trade deals that the secretaries help broker. People want to bring foreign capital into the U.S., and they're incentivized to do it when the tax structure is friendly, the energy and business environment are friendly. Like it all becomes very additive. So I think it's probably a two-way street. Yeah. But the point is that people are making the commitment, Joe, and that's unprecedented.
Well, when we talk about reshoring, that can mean a lot of different things. There was a point at which the Commerce Secretary, Howard Lutnick, suggested that we start making iPhones here in the United States, that should, in fact, be possible. We just talked to Ed Ludlow before you sat down with us, and he said that's not what this is about. There are going to be different incentives when it comes to domestic manufacturing. How important is it for the White House to have Tim Cook make iPhones here in the U.S., or is that never going to happen?
What matters is high value-added manufacturing jobs, whatever that might be.
Not people turning screws into phones.
These technologies, Joe, are changing so rapidly, but the administration really wants to have the best high growth, low inflation, high cost, a high standard of living, high standard of living, low cost of living. Right. Society possible. And those jobs take the automobile industry, very important industry, a lot of high tech, high value added type of employment. Things related to that, that's what matters most, and that's what the administration cares about. We talk about a blue-collar wage boom. Yeah. You want those kind of good-paying jobs, whatever they might be.
As opposed to low-end manufacturing.
As opposed to low-end manufacturing, that's right.
Making socks here in the U.S. again. Really interesting, the spend on AI that we're seeing. A fascinating piece of information that I saw research earlier, that the CapEx from AI is actually adding more to the economy than consumer spending at the moment. A lot of this has been announced inside the White House, of course. Jensen Huang, we think of the Larry Ellison OpenAI announcement. I could just keep on going here, the money from SoftBank. Do you worry that CapEx from AI is essentially single-handedly propping up the economy here, that it's a more narrow investment than we need?
No, because first of all, the AI has been very strong. That shows up in information processing and related equipment within the GDP accounts. But industrial equipment's been strong, transportation equipment's been strong. We're talking about a CapEx comeback that's not just limited to AI. Having said that, when you have an industry that's growing as rapidly and as exponentially as it is, the math is going to be more additive than, say, the consumer side. In other words, we're looking at second derivatives. If something is a small but largely growing part of the economy, its incremental growth for a quarter or two is going to be faster. But the point is, if you get this CapEx comeback, tied in with the blue-collar boom we're seeing in wages, real wages expanding, consumer spending is going to be strong, and that's going to power the economy upward.
I want to ask you about the Fed. In fact, the president was just talking about this last evening. James, I don't know if we can spin that back right now, but I want to ask you about the search, because it's a very short list based on what the president was saying yesterday in his conversation with reporters. Let's listen to President Trump from yesterday.
Fed governor, I'll be making that decision before the end of the week, and we'll either decide on one for permanence or the 4-month period, the term. There's a term of about a number of months. We have a couple of candidates. I mean, everybody wants it, okay? It's not a couple, but we've narrowed it to a couple of candidates. And we've also, we're looking at the Fed chair, and that's down to 4 people right now.
Down to 4. Interesting. As we spend time with Joe Lavorgna here on Balance of Power, there's a story today on the Bloomberg about the idea of a temporary Fed governor filling the seat vacated by Governor Kugler. What would be the benefit of doing that? Is that an idea that you support instead of just going for it right now?
It would. My understanding, Joe, would be to have to be Senate confirmed.
That's right. It's going to take a while.
You have to see what happens on that, and there's only so many months. So we'll see what happens. But I don't. You know, the president wants to do it. That's great. But we'll have to see then if you have to get the Senate on board. But in terms of just general people, I know you want to ask you that. There's a really good crop of folks that could do the job.
The battle of the Kevins, it sounds like, and
the nice thing
your boss is not on the list anymore.
The nice thing, Joe, about where I sit right now, unlike my prior role, is I don't have to say who I think it's going to be. I just know whoever it will be. It'll be somebody that will be.
You're telling me Donald Trump's not going to ask you who you think should be the next?
It will be somebody good, Joe, who will have a very good relationship with the president. Yeah, and that's all.
Well,
that will matter.
Name game aside, why not just name the next chair now and have them fill that seat until it's time?
Well, I guess the issue would be that, and Secretary Bessent mentioned this before, and that is if you have like a shadow person, maybe that's not the best way to go.
Okay.
And by the way, the person may not want to have that shadow role because then you're sort of in competition with who with Jay Powell at the moment.
Yeah.
So we'll see how that plays out. But I think the key point is that, you're seeing the Fed now talk about the need for lower rates. You saw 2 governors dissent. That was kind of an historic event, hadn't happened over 30 years. You're seeing some of the bank presidents now come out and think that rates need to be lowered.
Yeah.
So I think pretty soon everybody will be on the same page.
Why lower rates now if we still haven't gotten to 2%? That's the benchmark we talked about for the entire Biden administration. Does it need to change? Should it be 3% if you start cutting now?
So the reason, Joe, a couple-fold. Number one is that inflation's a lagging indicator. So if you're waiting for inflation to move lower, if you think the trajectory is down as we think it is, you're waiting too long, number one. Number two, the tax bill is written to increase the economy's supply potential. So that means you could have fast growth, and actually as you increase productive capacity, inflation can drop. And then the third piece is if you look at interest-sensitive areas of the economy, autos, housing, some pockets within manufacturing, those areas are soft. And would benefit from lower rates. And besides, the Fed itself has rates well above where the committee believes that the neutral rate is. So I don't think inflation is the fear. In fact, if anything, as President Trump highlighted, the inflation was not going to be present with the tariffs. That's not shown up in the aggregate data. If any of the numbers have been weaker. And therefore, the Fed ought to take that into consideration.
When you're telling a growth story, though, since you've been here, you've talked about the way the economy is going to grow and the way wages are going to go up. So why would it be a sin to keep interest rates where they are for a minute to make sure that inflation doesn't start moving higher again?
Because the fundamental issue is growth. Growth does not cause inflation, Joe. And there are too many people within the economics profession that believe growth causes inflation.
This is what every mainstream economist comes on and tells us.
And they're completely wrong. That's why they've been wrong on many things, including the tariffs. As my old boss, Larry Kudlow, would say, that too many people working does not cause inflation. Inflation is always and everywhere a monetary phenomenon.
Can bring inflation.
No, not wage. No, just money and credit. Money and credit creation are what drive the inflation process, not wages, especially wages that are tied to the economy's productive capacity growing. In other words, you're starting a business, you're building a plant, you're paying those workers to build that plant to create more of the goods and services to be delivered to the populace. That's disinflationary, just as you saw, again, with President Trump's first term. Very supply-focused. President Trump had very strong growth and low and falling inflation. So this notion somehow you're going to have very good growth, you're going to have a boom, and this boom somehow is inflationary is not at all consistent with the data.
Is this Trump data now?
What's that?
Is this Trump data?
No.
It's not. It's still Biden data.
I didn't know what you meant by that.
Yeah.
No, I mean, look, here's the thing, that the one big beautiful bill was passed July 4th. Nobody thought that could be done. The president said it needed to get done. Secretary Bessent worked hard with the people on the Hill to get that done, which is a great accomplishment. You've got numerous trade deals that are really making some great progress that people didn't think was going to happen. Equity markets are strong. The outlook is very, very positive. So I think we're going to see a pretty strong economy. And people know, look at the cost of living, how much it's come down already. Yes, it's the president's economy.